because for me, trading is just a vehicle for me.
Vehicle. I agree. It's a vehicle for freedom. Yeah.
Two traders, Darren and Walter, pull back the curtain on profitable trading systems, consistent money management, and profitable psychological triggers. Welcome to the Two Traders podcast.
In part 2, Darren and I tackle what traders can learn from the UK pension fund scheme, how to reduce your overwhelm when it comes to setting your trading goals. We'll talk about the retired trader who is a hazard on the roads and why, the motivation behind trading that's nearly universal for all traders, why you must lock into this one thing when you're setting your trading system up and going live, and what businesses going bust have to do with traders. And finally, we'll figure out which is the best band. All this and more in part 2 of the Two Traders podcast.
Yeah, well, I mean, I think that potentially it could, even though I think everyone can do it, I still think that potentially there's a really tough road for some people and perhaps an easier road for others. And I feel like one of the interesting things about our discussions is that you are someone who's very good in the world of ideas. Like, that's where you live. You live in the world of ideas, right? So naturally, an extension of that is naturally someone will come to the right approach for their trading when they happen upon the right idea, right? You know what I mean? I mean, that's just my take, and it could be off, but that's how I see it. But like, for example, I know a guy, all right, he's retired now. He's a former trader. He traded for a really famous diamond company, and so they are dealing in diamonds and currencies around the world. So he would trade different currencies and hedge their risk and things like that. And this individual has also had a stroke, okay? And he drives around in his car, and his car is totally like trashed on one side, right? Because he probably shouldn't be driving. Now, when I see that, I think, is there also somebody else out there, in the same situation as a trader, is kind of driving their platform, they're going along, they've got their account, but they really shouldn't be doing it. I mean, it's a little bit dangerous because, yeah, they can do it, and yeah, they can make it, and yeah, it can happen. But the way they're traveling right now, it's just, someone's going to get hurt.
Yeah, I see your point now, definitely.
It's tough. I don't know.
Yeah, I suppose so, but I don't know. I mean, you kind of have to factor in other things like luck, and chance.
Yeah.
as well. You could be, let's say you're an amazing physicist, great with maths, and you've come to trading, and you've got this idea that it's like a math problem, it's a physics problem, and there's you just need to get everything right, and then, you're sorted, you've solved the problem. And, that's how you've always approached stuff. And so that's how you approach trading. And, you can't get it right because your approach is too narrow and you're not seeing the big picture. And then, you could go on holiday somewhere and sit down at a bar and start chatting to someone, and the light bulb could go off, and you could just, start to see, a chance meeting or a chat, you could stumble on a web page that just sparks an idea, or are you saying that those sort of people they would miss those opportunities?
Maybe, I don't know. Or maybe they would, maybe they've got their risk all upside down. Maybe they have the system, it matches up, they can execute it, but they're just driving it to the ground with, because we're all somewhere on the curve, right? On the risk curve. We're either over the edge and we're headed for destruction, or we're on the conservative side where we're not going to maximize our returns. So, maybe some people, they just always are pushing the limits. They always have their foot on the gas pedal, so to speak, and they just want to go hard. That's just not compatible with trading, maybe. I don't know if that's true. I don't know.
I find it very difficult because I see most trading systems that I look at, I see a good probability that they're profitable. So I'm seeing, say, 70% of trading systems that I look at are profitable, and then on the flip side, you've got a large majority of traders who aren't profitable. So I see the problem, as what's going on there with the most, majority of strategies being profitable and the majority of traders not being profitable. And, there has to be, what's the connection that's breaking there? So I see it, although it's a kind of complex, difficult problem, I see it as really being fairly simple to solve.
Right. But sometimes they're deceivingly simple problems they seem so easy to solve, but no one's able to do it, Darren. Like if you look at I've seen the statistics on the new businesses. For example, the new businesses in Australia, it's something like, in 4 years, 80% of the businesses fail. They're no longer in existence in 4 years from now. There's only 20% left or something like that. Well, you think about these business owners aren't silly. They understand that they're not selling their products or their services at a loss. They know what their expenses are, and yet they still end up losing or throwing in the towel 4 years later, the vast majority of them. Well, how can that be? It's kind of what you're talking about. Like there are all of these free trading systems out there for you to pick up and use, and you can make them work, and yet we know that most of the traders just aren't doing this. So it's a user error, right? I think that's what the software people would call it, a user error. Right? I mean, is that what's going on? So that's where we end up always on this podcast. For those people if this is your first episode, I apologize, but we end up going back to the psychology of it, don't we? And so that's kind of where we're at, I suppose, is that it's being aware of what you're doing and understanding what you need to do, essentially. So you've got this trading system. It's going to make money. It should make money. It's designed to make money. But how do you kick it and make it work? Well, it's really about understanding what you are doing.
I think a lot of us, we're there. We've solved the problem. We've got what we really want. We've got a strategy that has a positive expectancy, but we either chuck the towel in too soon or we execute it wrongly. I think that's the disconnect that goes on. Or we want to be too far outside the curve. We want to double our account every month with a strategy that's going to double it in 5 or 10 years. And the majority of strategies are much closer to that average than they are way out there. But we all want to be way out there, don't we? We don't want to be average. Actually, the place you want to be, the safest place to be, is close to the average. It's just above it.
In the middle. But I think part of it is we focused on what you're saying. We focused on the doubling the account, and we don't look at the other side of the drawdowns that are part of that.
Yeah, definitely.
So when we're living as the trader, we are somewhere on this equity curve. We could be in a little valley. We could be up at a peak. More likely than not, we're somewhere in between the peak and the valley. And the question is, how bumpy a ride do you want? Like in Disneyland, they used to have, this is a long time ago now, but when in Disneyland, you used to go there and they would sell you these tickets. And so certain tickets would work on certain rides. And the E-ticket was like the scary, Space Mountain roller coaster ride. And then the A ticket was just kind of like Dumbo or Carousel or whatever. And so, you wanted to save your E-tickets for the really good ones. Well, I kind of look at traders the same way, where we have some traders are just like, they're locked in. They want that E-ticket. Their goals, they understand, it's going to be a bumpy ride. They may blow up or whatever along the way, but that's the risk they're willing to take. And then there are others who are just want to ride Dumbo. They don't want anything too exciting. They just don't want to lose it all. And so they're okay with the little shallow peak, little shallow valleys and small rounded peaks, I suppose.
Yeah, and you can't really argue one is the right way and one is the wrong way either.
Yeah, absolutely. But I suppose a lot of traders don't even think of it that way. Like the number of traders that say, risk 1% or 2% or whatever, they don't look at it in terms of what's my goal? What's my criterion? Is my criterion to avoid the 15% drawdown, or is my criterion to make 300% in the next 2 years? What's my criterion? And you build everything off of that. To me, I mean, it just seems obvious, but I suppose I didn't do that when I first started trading. I didn't look at it that way. I just said, okay, this looks pretty good. I'll risk 2%, and see how that goes. My back testing looked all right at 2%. I didn't look at it from the perspective of my goals should dictate my actions. And I think I don't know if that's common or not. I think it is. I think that most traders, they just say, well, what can I make with this? And they don't look at it from, you actually have a lot of leeway there. You can direct that trading system many different ways with how you manage your risk.
Do you think half the problem is that we're always thinking, or we're always drawn to think in too short a time horizon? I very rarely hear any traders say what their 10-year plan is, but I've heard a lot of traders say they want to make $1 million in a year.
Yeah.
But you very rarely hear someone say, well, I'd like to make 40,000 a year in 10 years' time.
Right. Yeah. Well, I think.
Which one's more realistic?
Yeah. Well, I think that there's a lot of that going on in life. Like, you don't hear the sports stars say, we'd really like to win a World Cup in the next 8 years. They don't. They want to win it the next World Cup, or that kind of thing seems pretty common. The short term thinking. I've heard though.
Yeah.
Yeah.
There was a thing with pension contributions in the UK, wasn't there? And there's an economist called Roger Thaler, I think his name is, and he worked with the British government because they had this pension scheme where if you contributed a small part of your wages to your pension scheme, the government would match it. And if you work this out over a long period of time, it's a really good plan for you to do. But you had to enrol yourself, and they found that the take up was really, really low. And Roger Thaler said to them was just auto enroll people and then give them the option to opt out.
Opt out, yeah.
Yeah. And the take-up swing has been massive. And what they worked out was that, even though it's a good plan, it's good for you to sign up for this. It's a long-term plan. And in the short term, people are just too lazy to fill the form out. Whereas if the form's already been filled out for them, then they're then too lazy to opt out. So they actually just stay in. We really kind of battle against any long-term ideas because we're just interested in what's right in front of our noses in that moment. And I think we're the same with trading. I think it's really hard to push ourselves into a long-term plan, even when all of the data and the facts are in front of your eyes. Look, you're going to achieve your goals, but it's going to take a little bit of time, and you're going to have to stick to the plan. Even when faced with that information, it's really hard for us to do.
Yep.
Even smart, intelligent people.
Yep. Do you think there's a selection bias, though? Like, do you think that there's a self-selection bias where the people that are drawn to high-leveraged trading, such as currency trading, are really... they're just looking for a vehicle for, quick, short-term millions. That's what, it's kind of like rock and roll bands or whatever. Is it that drug addicts seek out music industry, or is it that the music industry grows drug addicts? You know what I mean? Like, how does that, what came first? Yeah.
Are you saying that essentially currency trading attracts the sort of personalities who really shouldn't be currency trading? Is that what you're going to say?
Well, maybe not that strong. Maybe something along the lines of, maybe this is the kind of thing that self-selects for people who have these, short-term goals, and they're not really thinking. Like, I think that the share traders are much more deliberate in their, like, the share traders that I've run across that are, predominantly share traders and dabble in Forex, they come from a completely different angle.
Right.
Completely different angle.
See, I was kind of the impression that that's a problem for everyone, and you're kind of suggesting that it's more of a personality
Maybe
trait.
I don't know. I mean, I'm just floating it out there because it seems like I know, for example, I've heard people have told me, like I'm not this is the okay. These are traders I've met. Okay, shall remain nameless, but people have told me, hey, I'm a forex trading. I don't know. I'm gonna go off and flip houses, or another trader says, I'm gonna get into internet marketing, And to me, that's like a red flag. It's like, okay, these guys don't really like trading is just kind of like a thing that they're dipping their toe in. It's not. They don't really eat and breathe trading. It's just kind of like this is a vehicle for them.
Oh, that's difficult now, you see, because for me, trading is just a vehicle for me.
Vehicle. I agree. It's a vehicle for freedom. Yeah.
I'm not actually really interested in trading. I don't. It doesn't inspire me. It doesn't excite me. It's the vehicle for me.
Yeah, but I think.
But at the same time, I am really interested in human behavior and psychology.
Exactly.
But that's something that wasn't there originally. I got into trading just because it was a vehicle that could
freedom
perhaps offer me some experiences or benefits that I couldn't quite achieve through my other work and profession.
Right.
So originally that was the vehicle for me, and it still is in trading, but I've developed an interest in behavior and psychology.
But see, I would argue that is the trading. Like that what you're saying about the interest in human behavior, essentially, that's it. That is trading. In the end, you do this long enough, you're probably going to come to the conclusion that looking in and seeing where you're at as a person and understanding what you're doing, that's trading. Like that's what it ends up being. I mean, and I don't care if you're using an automated EA super robot black box whatever 2000 system, it's the same thing. That would be my argument.
Yeah, I would agree as well. And if you look at the history as well, I think behavioral economics is perhaps considered, and the psychology side is perhaps considered a new field. If you look back, it's always been around, and from what I've read, initially that was more important than the economics side of it. And then, it seems like we went through a period of kind of dismissing that and it being more technical and about the numbers. And now it's kind of coming back in vogue. But there's still so little of it on the trading forums, and that puzzles me. The biggest trading forum that I know, in terms of numbers of people, hardly ever touches on it. I go and check it every day to see if there's a post about it. I don't see anything on there. I really don't. Not one thread, not one suggestion that it might be an issue, nothing.
But don't you think, and I could be wrong here, but don't you think that the seekers on the internet, they're looking for trading systems, and the people who've kind of figured out how they're going to interact with the market, and they've got their instruments, they've got their systems to use, they've got their tools, they just go off and they're not really, do you know what I mean? Like they've gone off someplace else. They're beating the drum in the trading tribe in Toronto or whatever. They're not, you know what I mean?
Yeah, I suppose there's no real point going into threads and arguing.
Yeah, I mean, it's true. Like you go to these forums and you'll see some really insightful posts, and then inevitably you scroll back and look at go to the profile and look, oh, the last time he posted was in 2007 or whatever. You know what I mean? Like they're gone. It's a ghost town. They've left, and they've left it to the jackals to go ahead and tear at the meat. That's, you know what I mean? Like it's funny, but I mean it ends up being that way. I agree though. I think that's pretty clear when you look around. I remember there was a guy like on one trading forum that shall remain nameless. He would just set everyone off, like, and I think that's what he wanted to do. You know what I mean? Like, he wanted to just fire people up. This was back in 2003, 2004. He wanted to fire people up, and I talked to him like a couple of times on Skype because he was so like he would just rail against everything. You know what I mean? And he got kicked off a few times and whatever. And we've all seen this happen. And he was like, and he would like, he said to me, he said, you know how in Rambo, the movie Rambo, he said the guy, like, I don't even remember this in Rambo, but apparently he said, the guy, he said he is the weapon or something like that. He's like, yeah, that's how my trading is. He's like, I learned it from this guy in China. He taught me how to do it. And, he's talking about how he never uses stop losses and he just keeps averaging into his losers and all this stuff. And everyone was just saying, you're an idiot. What are you doing? You're crazy, blah, blah, blah. But it was so entertaining, and I think that's part of why people go there. They're looking for the magic system and they just want to be, they just want to, start a fight or be entertained or whatever. I don't know. And then once you get into it, you just go off and, you look at, behavioral economics, or you get interested more in the psychology thing, like Kahneman and Tversky, a lot of the stuff that's out there that can help you, or maybe you get into meditation or hypnosis or journaling or whatever it is. You kind of grow into it from a different angle.
Yeah, I think
in the end, that's what it is. That's what it is. Trading is that. In the end, it's just understanding you.
Yeah.
In the end.
When they get into these debates, they want them to come round to the consensus that they're right, and it's difficult, isn't it? Because it is good to debate these ideas, and it's good to argue different sides of an argument. I think the language you use when you have these debates really says a lot about what your trading's like.
And how do you know that? And so what are you looking for when you say, like, I know I think I know what you're saying, but when you say the language, what do you mean?
Well, even subtle things like saying this is the best exit, using the term the best, or saying things clearly, saying technical elements don't work and technical elements do work, Yeah, so being really specific, I think, is always a sign that there's issues there.
Yep.
But you have to have these debates. It is good to argue these points, but you have to consider your language when you're arguing these points.
But everybody knows that the Beatles are the best band, Darren.
Exactly. Yeah, we had in my group this week we had this very debate. And
about the Beatles.
Well, not about the Beatles, but they did come up later down in the thread, But
really?
One of my members posted, which is the best trader, Trader A and Trader B. And Trader A had a very low win rate, but a high risk to reward, and Trader A had a higher win rate and a smaller target. And based on the other facts, the guy with this smaller target had a better Sharpe ratio, and in the test that we were examining, Trader B had made the most profit. Okay, and and then the debate was about which one is best, and I took exception to this, saying, well, they're both making profit, so you can't really say which one is best. And, you can't just break it down to profit. And, for many reasons, because, for instance, Trader A, who has much lower win rate and higher risk to reward, would not really see if there was any advantage in a short run test, say 100 trades. But over 10,000 trades, the figures would be very different, So just my argument was just using the term best is not really helpful, in these sort of scenarios. And that's kind of, an approach thing. That's, if you're trying to decide how you want to trade yourself, then, it's obvious that you're going to think in these terms. But you also have to remember that, best for you is not best for trader B or trader C. So, I think language is important, and it says a lot about your bigger picture and bigger view of trading.
And I think sometimes in the beginning there's a tendency to just kind of defer to others and say, well, you're more experienced than me, Darren. Tell me tell me what the better one is, or something like that. Maybe that's part of it. When really, obviously, what you should be doing is looking at what you're, what makes sense to you. What's your criterion? What are you working on here? Is it, is Sharpe ratio, is Sharpe ratio your, you know what I mean? Is that really what you're going for? I mean, is that, yeah.
Yeah, and any of these measures in a field like trading, like Sharpe ratio, there's advantages for Sharpe ratio use, but there's also periods where it's the way it looks at data, it tends to discard certain conditions, so it's not always perfect. But if your belief is that Sharpe ratio is the best, then sometimes it's an advantage to use something that might not be the best, but you believe in it. Those things need to be considered as well.
Yeah, absolutely. If it means that you're going to stick with it, or it's easier for you to execute, then go for it. Yeah. And sometimes the numbers don't make sense. Sometimes they don't actually fit the data. I remember I was trading a grid trading strategy, and I had options to cover the downside risk. And I was going into the trading tribe in Sydney, and we were comparing you're not supposed to do this at the trading tribe, but at the end of the trading tribe, we would actually sit down and have where we would go over our trading statistics and stuff like that you wouldn't normally do at a tribe meeting. And they asked me for the numbers, and I ran them. I said, look, guys, this isn't going to make any sense because of the strategy, the way it works. And they were all like, what? This is amazing, and all this stuff. And I said, yeah, it's because it's it's a grid trading system. It's kind of it's like cheating the number. You know what I mean? The number makes no sense when you calculate that statistic. So that's another thing to keep in mind, is that you can have something where you kind of trick the number, or the formula doesn't really apply. Yeah. Well, hey, Darren, any last words? I really appreciate your time tonight. This has been an interesting discussion about, what we've learned and what we know. Turns out not much. Things like that. So
another episode of really helpful advice about
yes,
trading.
And now we all know the Beatles are the best band. Yes.
Yeah.
Anything else to add? I hope you can make it through the snow.
It seems to have snow's stopped. I'm staying here at the charts today. I'm going nowhere.
All right. Awesome. All right. Well, thanks for your time, Darren. I really appreciate it.
Okay, Walter. I'll see you next week.
See you next time. Okay. Bye.